So, Jordan Lawrence, welcome to All Things Cyber.
Thank you, Robin. Nice to be here.
So, maybe for our guests and our viewers, a little introduction about yourself.
I'm currently Chief Executive Officer of Damisa. We do B2B cross-border payments using stablecoin infrastructure. I've been in the FinTech space for almost 20 years.
And how have you seen evolving the payment industry, going against all beasts and dinosaurs into fast-moving cross-border payments?
I think the whole payment industry has changed. When someone says I've been in payments for 20 years, it doesn't really mean anything because last year was different, right? So I think the whole thing has changed massively. And I think it's going to change even more as everything shifts to stablecoin infrastructure from what I can see at the moment. A few regulatory headwinds blowing at the moment, where some of the legacy players, let's say, are got the upper hand at the moment. But it seems like they're really shifting towards the stablecoin space.
Do you see that those organizations are resilient and able to make that shift too?
I think there is a big battle internally from these enormous businesses that have had the run of everything for so long. Now they have to make a change into some new technology. You know, it's moving a slow moving oil tanker basically. So some of the large businesses, the large old school banks are really struggling, I think, which moves us on to the cybersecurity part, right? Which obviously you're making an enormous impact on, as some of these legacy infrastructure businesses don't really know who they plugged in, don't know what endpoints they have. And I think it's from your point of view, I think it's an enormous opportunity to help on the cyber side.
Yeah, so what we see is that, all those banks, they are, even with old systems somewhere hidden in the basement, still connected to new infrastructure, and to understand that whole ecosystem to who they are connected, and also with regulatory pressure is enormous. It's interesting if you build this fresh from the start, I can assume it's a big advantage for you and Damisa to get into new markets with completely new infrastructure and without any legacy.
Yeah, I think regulation is a legacy, right? And this is what we're seeing at the moment. So unifying the old regulation as it pertains to the fiat currencies to now the new legislation as it goes into stablecoins, somehow you need to unify them, right? Otherwise, what we see at the moment is capital controls in Africa, for example, have been completely bypassed by stablecoiners. Brazil has just changed its regulations because people were avoiding IOF tax by sending stablecoins out of the country instead of fiat. So all this is changing really fast, right, which is great because the unification of old fiat rails regulation onto the new stablecoin infrastructure, it makes sense because then everyone will adopt it, it's regulated, and everyone uses it properly, basically.
Who are the heavy users of stablecoins at the moment? And do you see this growing also to consumers?
Absolutely. So I spent a lot of time in Africa. I'm off to Africa again on Monday. And you see there, stablecoins are a lifeline because the currency fluctuates so much against, let's say, the G3 currencies, and they need to do import-export into those African countries. Nobody really wants to hold the domestic currency because it fluctuates too much. So everybody's holding, businesses are holding mostly USDT, the Tether stablecoin, back to the US dollar. And actually, when I was in Nigeria last time, I paid for 3 or 4 different things using Tether, using USDT. So everybody's really feeling volley at the moment. So I think it depends which market you're in, but you see consumers are really using stablecoins already. Not to mention Agentic e-commerce, which is just coming around the corner. Everybody's talking about it. Is the new thing.
What is this?
Agentic e-commerce. So basically, you're an agent which goes online and does your shopping for you, right? It knows what you want. It has your data. It has your bank account or your credit card. In this case, it should be what I think links to a stablecoin wallet. This being the smart contracts and the rest of it. And it's basically making buying decisions for you.
But is there any consumer protection on that? So does you see platforms like OpenClaw, people giving their credit cards actually have no control of what's happening? In the end, there will be governments wanting control of that.
Damisa has actually built for the B2B space an escrow service on the stablecoin infrastructure. So basically somebody, let's say the buyer puts the money into an escrow account. You can't really call it escrow because you need a different license for that, but it is an escrow service where basically we hold the funds on behalf of the buyer, right? The seller sends the goods. The buyer says, yes, I've got everything I need. Thanks very much. And then the money is released with a bit of yield. Now I can see that happening the same from a consumer situation with agentic e-commerce. So the agent basically buys the goods. The stablecoin goes into a sort of escrow account. The goods get delivered, get ticked off, and then you've got 24 hours to tick off the goods, for example. And then the money gets released to the merchant.
if you look to current, let's say the old fiat platforms, it takes days to move money from Africa to the US, and with stablecoins, we are seconds. How important is it to follow, that whole supply chain for payments and also making connection to cybersecurity?
I think it's a bit of a myth that payment gets settled in seconds, right? And I was on the Payment Shed podcast a couple of weeks ago, which we talked about the same thing, because many people think, okay, you make a payment with stablecoin, you're going to get your money instantly. Not really the case, right? I think the settlement finality of when the money comes into your stablecoin account in stablecoins, that is instant. But obviously getting it out of that stablecoin environment into the fiat rails, there can be compliance hurdles, there can be bank checks, all the rest of it, which can take time. So it's definitely a lot faster, and either the money is sitting in a stablecoin account, let's say the Damisa environment, or sitting in your bank account. There can be they can't be anywhere else, not like before where you send a SWIFT payment out of Africa and it goes through 4 different correspondent banks. Money goes missing for up to 3 months, right? Which happened to me before. So that is true. That can be a lot faster. When it comes to cybersecurity, again, I think the old fiat rails had issues because the correspondent banks, you don't know who's plugged into those. There could be 3 or 4 of them involved in the transaction. You don't know who's plugged into the bank where the money's going. You don't know whether it's plugged into the bank where money's come from. So I think that was a lot more intense, let's say, from a cybersecurity perspective. Now you've got different problems because the stablecoins will be sitting in, let's say, a third-party wallet, a non-custodial wallet, or a custodial wallet.
So we see that with stablecoins, the new technologies, everything is linked to each other. And what we see is that we can help companies really track those connections and make sure that it's visible, it's transparent, to really explore the whole supply chain and to make this visible. I think visibility is a key driver of everything when we want to connect and make it as convenient as possible.
Exactly. So I know some of the customers you got, probably can't mention them given the nature of the business, but there's some of the very, very large ones. And, when we discussed it before, I think the main opportunity for ThingsRecon in the FinTech space is some of these legacy businesses that have been around for a very long time. In their sort of speed of growth, they plugged in so many different partners, so many different endpoints, let's say. They've forgotten who's they plugged in, let alone maybe they're not using them. And every single one of those endpoints, of course, is a threat to the business, right?
No, it's 64% of the breaches in FinTech are through third parties. And even this week, there was Fiserv from the US. They had a breach, old technology, and so connected. And it already takes 3-4 days for them to investigate what the source of that breach is. And 40,000 employees of big company in your space, and to track that breach is already for them a lot of work. And then you have the whole knock-on effect. What happens if they get breached and your whole digital ecosystem is impacted by that?
I mean, obviously they'll recover thanks to people like you, right? But I imagine the stock took a bit of a hit. The same thing happened to Equifax a few years ago. I think you bring up a good point because Fiserv is one of those businesses in the FinTech space that have been on a buying spree over the years, right? You have Shift4 buying a lot of stuff at the moment. Fiserv to bought a lot of things. Obviously, Global Payments just bought WellPay. Global Payments is another classic example. It's a business has been around for a long time. They're buying a lot of things. Of course, they know what they're buying from a due diligence perspective, but they don't know what they're buying from a cybersecurity perspective. Never, right? And that's probably what's happening there with Fiserv. They buy a company, it's a risk from a cyber perspective, and someone gets in through the back door.
Yeah, it's third parties who you contract mostly for convenience, and because you want to grow your business, you want to make it more scalable. But the due diligence done on those companies is often very, very shallow, and they scratch the surface. But to really understand the ecosystem to who that third party is connected to, that's very often they don't spend the time and to really understand that. And then that's also what you see currently in the Iranian conflict, for example. People suddenly start to realize that they can't host in a single data center. And the Amazon data center was hit in this conflict in the UAE. And then suddenly you see that whole supply chain effect of being only in one data center. And they need to spread their wings and understand what is also the fourth party, for example. And that will slow down your business if you don't understand that.
Not many people know much about cybersecurity in the fintech space. Hence, some of the CISOs I've worked for the past, amazing people, are really focused on that cybersecurity space within the fintech world, but it's not really a common thing people talking about on a daily basis. What makes ThingsRecon like super special for the industry in general?
What we do in the first stage of an engagement is we help with visibility, because visibility is good starting points to understand to who you're connected, how you're connected, not only as the vendors you're working with, but might also be customers. KYC, KYT, KYB is always late.
No, you reach it.
But something big and a big topic for all the CISOs. So we always start with that visibility layer to help them understand, okay, to who am I connected and where do I have concentration risk? And then we go to the cybersecurity layer. We look to who you are connected and how you are connected to those third parties. And we're looking to a layer deeper to the fourth party if there might be any concentration risk there. And then from cyber, we also go to open source intelligence, because you can't do a one point in time every 12 months assessment on a vendor where you're working with on a daily basis. So we really do continuous monitoring of that whole digital ecosystem and all the vendors, looking for signals like a breach or like a big layoff or anything which might impact your business, which you need to know now. And the biggest question we get from our customer, and mainly the CISO, is when something happens, we always get a phone call or an email. Am I impacted by it? And to understand that ecosystem and that visibility is the first layer where the CISOs are, which keep them awake, and which is important for them to have the continuous
Visibility.
visibility. Yeah.
And I know you guys have been involved at sort of governmental level, even, right? Countries, obviously, you cannot name the countries, but tell us how that works. One thing is a big enterprise business, but the second thing is a country.
Yeah, a country is, of course, if you look at your government, there's the critical national infrastructure. It's mainly the industry like oil and gas or ports, energy. So we help organizations within those governments to understand the threat landscape and to understand what might be knock-on effect. In one of our previous podcasts, we spoke about that. There might be a breach of a school or a bank, but if the school can't pay the energy bills, especially in a warm climate, they can't open. So it's a direct impact on all society. So if you look, for example, to those CNOs and the role they have in society, the impact on society is often much larger than people expect. And they're in their little economies by themselves. The Jaguar Land Rover breach last year was not about Jaguar Land Rover, but was especially around that whole knock-on effect that there were so many suppliers relying on that little economy around Jaguar Land Rover. So the impact is much bigger than cyber, but it's really on society.
Of course, yeah, wow. And where is ThingsRecon going? Like, obviously, you guys have been around for a while, and there's the big contracts. Where's the future of your business and I guess the industry itself, cybersecurity?
One of the big topic for us is obviously AI and new models like Mythos, which can't be released to the public because of the offensive of the hackers. They don't want to get that in bomb hands. So where we are heading is that we help companies understand their offensive, but also their defensive attack surface. And our vision is to reshape that whole third-party risk ecosystem and supply chain. And because everything is so connected, we took on the role to help companies really reshape their third-party risk programs, to move it not away, but to add not only compliance, but add risk to it. Because you can have, I always say, you can have insurance and have all the documents, I am compliant. But if there's somewhere a repository open or there's a misconfiguration and client data is leaked.
What's the repository?
It could be a code repository. A code repository like a GitLab or GitHub where you host client data or have codes for customers or for payments. Something is leaking. It's better to prevent it than afterwards to say that I'm compliant. Compliance helps a lot of companies to give guidance, but compliance doesn't take away the risk. That's the role we took on to help countries really move away from compliance only to compliance errors.
Gotcha. Okay, now I see. And what's if you, so we talked about the Iran war just a second ago, but obviously one of the key things that happened is suddenly Iran, obviously started bombing the data infrastructure and the data warehouses of OpenAI and things like that were around the area, let's say. From a cybersecurity perspective, right, you have suddenly what is a land-based data center. And they can be breaches, physical breaches. They can be breaches of the data as it comes in and out via whatever method.
And that's also what you see with AI. AI is suddenly there, but that's taken such an important role that Cloudflare, if it's down, nobody has access to ChatGPT, and everybody's panicking and goes out for coffee because we can't work in it anymore. So the human species have been extremely resilient to a lot of changes and also inventive in certain aspects. So, protecting that is a key role for companies who bring into space.
No, I completely agree. All right. So further on ThingsRecon, if somebody wants to reach out and get in touch with you and then obviously then the sales team, how do you get hold of you?
Of course, through our channels. But what we are trying to do as a company, so please feel free to reach out in camera, ThingsRecon.com. But the human, we're building an AI company inside, which is super interesting. But the human aspect is still key, especially in business, being an entrepreneur, working with people together, sitting here in the podcast studio. The human aspect is still a key driver in any business. And for Damisa, but where you see is stablecoin the end game, or do you already see new developments after stablecoin?
I think the industries we're going after and into with Damisa are going to keep us busy for the very long term. These are the B2B payments for the commodities industry, let's say. It's a massive industry which has been really underserved over the years. As people think of business moving sugar around the world, foundational elements of our everyday lives: sugar, coffee, beans, Russ. These are huge companies shipping billions of dollars of these commodities around the world every year, still paying, for escrow, still paying for bank guarantees and letters of credit and bills of lading and things like this, which have been around since the 1800s. So our goal is to, get even more into these kind of industries. PSPs, so payment service providers, can use us for stablecoin infrastructure. There's the Treasury element of Damisa. You imagine you're a business in Brazil that doesn't want to hold Brazilian reals because your actual head office is in the UK or the US. Getting the money from reals back into the mothership, let's say, is super important from a Treasury perspective, so we don't take the risk on the currencies in order to pay everybody else locally. So these kind of Treasury services, any idle cash, like if you get, let's say you are those businesses, and normally you're moving money between Latin America and Europe, or Latin America and the US, and it's taking 3 or 4 days to get the money across, that money is just sat there doing nothing. Whereas, again, with stablecoins, it's sitting in a Damisa environment or another wallet generating yield. So it doesn't matter what you say, there's tens of millions of dollars being moved. 4 days can actually make you a fair bit of yield, which and every penny helps in modern business, right? So we're focusing on these things, and this is enough to keep us busy the next few years.
And for those old companies or those big Maersk, for example, who's moving ships all around the world and containers all around the world, to trust a startup like Damisa or to go with fiat banking? Is there a movement going? How do you secure that Damisa is a platform for them to adopt in next to the fiat platform where they used to have that delay, but there's obviously governmental backing.
Interesting, right? So governmental backing, and yeah, it's been flaky in some countries around the world, right? That's supposed to be honest. And the whole banking environment, even the enormous banks, like what's happened in Switzerland, banks can just go under, and stablecoins, especially in USDs or USDT and USDC, are mainly issued by the likes of JP Morgan, BlackRock, State Street, Jane Street. These are very large institutional banks, which, at the end of the day, if BlackRock goes under, generally there's a problem all over the world, not just locally, right? So the question comes on a trust is, do you trust BlackRock more than you trust your local bank? And most people actually do, especially if it's around a bank somewhere in the world. Aside from that, you don't just trust me and trust Damisa. We're a year and a half old business to move your tons of billions around the world. You're trusting the licenses, right? So we've gone through the licensing process in Australia to attain the ASIC AFSL license. It's the Australian Financial Services license. Comes with a digital currency exchange. We have a virtual asset service provider license in Poland, which we're upgrading to the crypto asset service provider license in Malta and in Greece. We speak about shipping in Maersk. We have a guy from Maersk at Damisa, one of our product guys. Actually, one of the co-founders is based in Greece, which is one of the biggest shipping hubs in the world. So I think the trust, you trust the issue of the stablecoin, which again is one of the biggest institutional banks in the world, and you trust the licenses, and the same licenses which are given to the let's say crypto guys are given to banks as well. Yeah.
So same question to you, but for our customers who are also moving money around the world, how can they be in touch with Damisa, and how can you help enterprises moving money around the world?
We will, for sure, if you have a big enterprise which needs money moving and you're not using stablecoin infrastructure at the moment, Damisa will be able to ensure your payments are cheaper, faster, and more secure than they ever were. We'll be able to generate yield from either funds from a treasury perspective. So in that case, you'll be making money out of your payment provider. We'll definitely be able to help. You can reach out to me, Jordan, at damisa.xyz. Follow me on LinkedIn. Just check out the website, damisa.xyz.
Thanks, Jordan. I think it was very insightful. Thanks for sharing what Damisa is doing and sharing your view on also on cyber. And hope to have you another time.
And thanks, Robin, as well. It's been great chatting. Good to learn more about ThingsRecon. And, I think the FinTech industry could really benefit from a conversation with you guys.